Okay guys, so welcome to the channel. Today we're gonna go into some of the prices in the Asian stock markets. I'm gonna recommend, and this is not financial advice, but 10 companies which are very interesting. So as this channel is more or less focused on Asia, in terms of we've done lots of travel content, shopping comparisons, pricing comparisons. So why not take a look at some of the investing climate? I'm going to look at three big markets: Japan, Singapore, and I'm also going to look at Thailand, which is sometimes overlooked, but has got some great companies. A lot of the content on YouTube today is obviously US focused, so I thought I'd take a different slant to show you some of the opportunities of investing in the public markets here in Asia. So I'm based in Southeast Asia. It's just markets have opened about 40 minutes. The US markets, the Nasdaq, SPX, etc., all in the red. So obviously Trump's tariffs, basically since February 14th, we've pretty much seen just a sea of red, as you can see here, the SPX. But like I said, I thought it'd be interesting to take a look at other regions of the world. I think if any of you are familiar with the markets, I think the Japanese market showed some very interesting opportunities last August around the carry trade crisis. When that unwound, we saw massive volatility in the market, similar to what we have today, albeit within the space of well, not so much 48 hours. It went from a Friday until the next Monday, so it went over the weekend. I would say it carried over the carry trade. Sorry, I couldn't resist the pun there, guys. But it was related to the yen and the dollar, nothing to do with the weekend. But my point is that was less pronounced, or it was more quick and abrupt. And rather, the volatility that we're seeing in the VIX and markets today is very much pronounced over the period of a couple of weeks. So as I was saying, there you see on August 2nd, you had a massive drop as the yen carry trade unwound. And in this moment, guys, what I'd like to show you are some of the really well-run companies, because it could also be a good opportunity across many of the markets, not just looking at the US, because you have a lot of the retailing companies there that actually Berkshire Hathaway have holdings in. I'll get into those in brief. They're very interesting. Plus Tokyo Electron, which is also very interesting in the semiconductor space. So guys, I'm new to this, so I'm testing also all the audio, etc. Hope some of the content gives you a bit of a different perspective than the standard stuff you see for the SPX, the Nasdaq, etc. You know, you've got a lot of hot stocks that are being kind of yeah, I'm looking for the right word. I have to be careful with my word. They're being not being sold, but they're obviously being influenced by very very influential influencers, and yeah, you know, they've done a lot of research. A lot of them are great. So the purpose of this is really to give you some complementary content, something that you may not have come across before. I'll try to make it light, not go into so much technical analysis. A lot of my approach is looking at fundamentals, looking at sectors, and like many say, it's not about timing the market, it's about time in the market. I myself have been in the market 15 plus years. I have an MBA, so I'm very educated across many business disciplines. So I want to share some of this it's all about results, guys. So I'm not going to show them here, but I have been quite successful throughout the years, and I've learned from a lot of mistakes. So happy to share those with you as we go along. So hopefully the content's interesting. I'll start with Japan, which is opened up in the red. It's closed now, but it opened up today. Then we'll take a quick look at Singapore, which actually today, of most of the Asian markets, the Straits Index was up versus many of the even the European markets and the US markets now. The DAX and the FTSE both, I think they ended up being positive, but the Singapore definitely showing signs of strength, or probably less volatile in this period of tariff. I would call it a tariff panic. But definitely the Singaporean market seems to be very stable, if not growing, as you can see from the last 3 months. If we look at pretty much mid-February, it's gone in the opposite direction of the US. And so it's gone up. Just recently has it seen a kind of a decline. And what I'd like to do is show you two stocks there, two companies, I would say, because it's, you know, you've got the people who look at this talking about horses. It's not about gambling, guys. It's about looking at companies, their fundamentals, and it's about investing, not gambling. So there's two companies that are very well run. They've got very strong balance sheets. I think one more so than the other, but I don't seem to be too biased. But one of them definitely is very interesting. And then finally, I'll get into some Thai stocks and Thailand, which is sometimes overlooked. But there's two companies here, one in the transport sector, AOT, the airport operator of Thailand, and a company known as CPALL. So you probably never heard of this company, but they operate a lot of the retail brands. You've all heard of 7-Eleven. Many of you probably frequent these stores. In America, this is owned by by Realty, stock ticker O. But in the Thai market and Southeast Asia, it's owned by CPALL. They also own other retail brands. So as you can see, the Thai market is down as we speak. So it depends on your outlook for the next 12, 24 months and beyond. Are you fundamentally bullish or bearish? There are recession talks coming in. If you look at the fundamentals, a lot of PMIs, in my humble opinion, there are some small signs, but there's a lot of positivity there, guys. PMIs have not tailed off, and if you look at the macro outlook, I think that the housing starts and the building permits are the only thing. If I look at Trump's policies, I personally think that they need to challenge the real estate sector to improve that. It's been down slightly, and if you look at history, the private or the public equity markets tend to follow the real estate markets throughout history, and that's just a fact. But anyway, guys, I digress. All very interesting, but let's just kind of zero in on some of these Asian markets and some of these great Asian companies that are quite often overlooked. And bear with me, first time doing this in a sense of sharing it kind of on YouTube. I will improve over time as it becomes more natural. So yeah, I appreciate your patience. So yeah, let's start with Japan, probably the more largest equity market in APAC, outside of China. So there's 5 companies within the. There's a special name in Japan, the Shōsha. I forgot it, guys. It's the it's somebody drop it in the comments. It's Shokso or something. It's kind of a name for these large trading houses. So right up the top, this is the largest Japanese companies by market cap. A lot of the automotives, the financial houses, Sony, of course. But what I want to show you is Itocho, Mitsui, and just going Sumitomo, Marubeni, and bear with me, guys. It's definitely in the top 100. The fifth one. It's not Rakuten. Well, you've got 4 of them there anyway, guys. So maybe I can filter by retailer. By the way, fast retailing there is fast retailing is also very strong. This is Uniqlo, pretty much. That's the holding company behind Uniqlo, which was sponsoring Novak Djokovic for a while. It was tennis gear, but they have very high quality stuff. Anyway, I wanted to show you this other kind of trading house. Yeah, so it's not here in the top 100 or the top 200. But maybe I've missed it. Alright guys, I'm gonna ask ChatGPT. Just bear with me. Okay guys, so actually it was staring me in the face. It was Mitsubishi. Yeah, so Mitsubishi. So the companies are so large that they've got many business units rolled into one holding company. So pretty much Mitsubishi Corporation. Yeah. All right. So guys, these 5 companies, very strong. Overall, the market now, just looking at Japan. I'm not here to give you trading advice, just my humble opinion. Like I mentioned, Japanese market has been trailing downwards. We could be in for a larger recession, or sorry, a larger downdraft or a bear market, depending on how these tariffs from the States play out, and the economic data and inflation data. So it does look like CPI is going down ever so slightly. If you look at true inflation, it's definitely at 1.46. If you look at obviously the official numbers, the CPI data, which tends to, I find this more accurate if I'm honest, although it's not the official data, but as it stands we're on 1.37, and this is dropping off, which would, I guess if the Federal Reserve functioned on this data, I think they'd already be cutting rates more frequently. But anyway, so in the context of Japan, pretty much these 5 trading houses are very well placed. I think that Mitsubishi is obviously, if we look at the historical performance, you see there in 2024 had an all-time high, and historically it's up and to the right, so it depends on your time horizon. So very strong performing company. Revenues have dipped as of earnings, but just going to show you some of the other companies we were discussing in the same segment. There is some value in the sense that the prices have come down considerably. So Itochu, also very strong. And most of these are part of Berkshire Hathaway. They are, or they have been, owned by Warren Buffett. This had a significant tail off and bottomed in February, and is on the rise again. So that's a Itochu. Let's take a look at Mitsui. So Mitsui has tailed off considerably as well. But as you can see, they're very strong performance, especially since COVID. So Japanese consumption really reflecting consumption there. And if we take a look at the remaining three, I'll go into these very quickly. I won't take up too much more time, guys. But I'm just going to show you kind of a more of a flavor of the other stocks outside the universe of, you know, the hot stocks that you hear about every day from financial influencers. Because to have a diversified portfolio in times like this, especially, you saw the Singaporean market increasing, it can really help you diversify away from some of the volatility that could really not sink your ship, but could you know, really cause a lot of headaches. So Sumitomo, interesting. A lot of these stocks have reached all-time highs around early 2024, and they really fell off a cliff during the unwinding of the yen carry trade last August. I won't be getting into the nuts and bolts, guys, of the companies themselves. Just a quick overview. Also getting comfortable to get into this kind of format. Marubeni, also very interesting, and it's really just kind of to open some eyes into other opportunities, because there are very high performing companies outside the US for diversification of your portfolios that would be very interesting, in my opinion, not financial advice. So that was Marubeni. So you've Itochu, Marubeni, Mitsubishi, Mitsui, and Sumitomo. So those are the five guys. Won't get into too much details, just giving you an idea of the price action. I'm making you aware of these high quality companies. Other stuff like the financial metrics, dividends, I might cover that in other videos and do kind of a focus on those. So yeah, moving on from Japan, let's take a look at Singapore. So Singapore, if I look at TradingView, as I mentioned, is probably a green shoot in a sea of red. This is the past day, this is the past month. Okay, so overall it's down within the month, but within the last 3 months, really from December, this is up. It's very much up. Then if I compare this to the SPX, as you see, there's a clear divergence there. It's not as pronounced. So yeah, as you can see there, the red or the pink line is the SPX. I'll add the Nasdaq to this, and it will get even more, or I'll add just the triple Q, which is more or less the Nasdaq. Okay, so as you can see, it tends to go higher than the SPX in the good times and usually lower in the, as you can see there, there's a much lower drop. So in the past month or so, this is why there's so much fear and volatility in the market. It's down almost 10% in the last month. Yeah, 9%, 10%, 7%. So in clear correction territory for the US market, but as you can see, Singapore is holding up quite nicely. If I look at the Nikkei 225, the Japanese market, I'm sure this, you know, when America catches has a sneeze, the rest of the markets tend to catch a cold or a flu. But yeah, the Nikkei is just holding up, still down. Let's take a look at the Thai market. Yeah, I'm just going to take a look actually at the AOT, the two companies, and I'm going to show you also CPALL. Wow, so AOT is down considerably. It's really fallen off a cliff. So sometimes people consider it catching a falling knife, but as Warren Buffett would say, buy when there's blood. I'm not sure if it was Napoleon or Warren Buffett about buying when there's blood in the street. But I think Warren Buffett said it more elegantly. When people are fearful, be brave or have courage. When people are overly confident, that's the time when you need to be fearful. So CPALL, yeah. So overall, the Thai. Sorry guys, I didn't know the ticker for Thailand. Somebody knows any ETFs? I think it's a SET index. Let's try SET. So hopefully you are learning something, guys. Maybe about Asian markets a bit here. All right, so the SET index, yes. All right, it'd be interesting to see how those two companies have performed versus the SET. Yeah, almost all are very much aligned there. CPALL and the SET very much in lockstep. Okay, but we lost the AOT. So yeah, I'd appreciate if you cut me some slack, guys. First run in this, and none of this is rehearsed. Doing it completely off the cuff. So as you can see there, actually, this is very interesting for the AOT, as they are off the last 3 months, minus 36%, which is significant. That's very, very large, guys. So guys, I was going to show you through each market. We started with Japan. We then started with Singapore. I wanted to show you Singapore, so I'll just finish that and get into the charts. I love looking at charts. I love data, but just conscious of your time too. So let's quickly go through the Singaporean stocks. So I didn't give it away in the intro. I'll speed it up, guys. Might just not hold you hostage, give you everything up front. I didn't mention the Singaporean stocks, but pretty much C Limited. They've put it here as Garena. It's not Garena. Garena is one unit of C. It has Garena. It has its own, pretty much its own PayPal, C Money, and then Shopee. So anybody who is familiar, has lived here in Southeast Asia, in Thailand, in Singapore, Philippines, Shopee is absolutely massive. And it's got a very iconic kind of ringtone or signal. You hear it on the phones everywhere, Shopee, Shopee. So these guys are going from strength to strength. And the second one was Grab. I'm less bullish personally on Grab. And I might throw in a third one in the Malaysian market. But I'll get into that in the chart analysis because there's a lot of synergies when you look at the charts. It's interesting to see some of these companies side by side because, like I said, it starts quite often the sectors follow each other, be it tech, be it housing, be it retail, transport, airlines. I won't say they're all a flock of sheep following the same direction. There's definitely leaders in there who stand out, and that's where you want to kind of get in. That's where you notice the high performers. And which is what I really like about the public markets, guys. All the data is there. I mean, most of the time they're heavily audited, so there's not so much cooking. But it is a very meritocratic game. And it's very difficult to manipulate, although I'm sure that happens. So back to my analogy about horses, you know, that's just all gambling, but this is very kind of managing. It's all about managing risk as well, guys. And yeah, I might get into that in other videos. Risk management. It's key to being successful in this game. If you want to build and grow wealth, it's very, very important. And I have made mistakes, which I'm happy to share with you, particularly regarding leverage, which is very dangerous. But yeah, in terms of the stocks here, from Singapore, C Limited, CEO is Forrest Lee. They're doing amazing in terms of just, it's a great product. And sometimes that's a good place to start, guys. Do these companies have good products if it's a consumer business? Grab, personally use it almost every day. To be honest, I was a shareholder in the past, but I sold out of Grab, and there's a lot of competition, which is what I mentioned in another one. There's a lot of competition. They pretty much offer ride hailing and deliveries, similar to Uber Eats and stuff like this in the West. It's been a long time, so I'm trying to think of the brands. Yeah, like Deliveroo, I think, is big in some markets. But Grab, yeah, the share performance, guys, look, it pretty much tanked when the interest rates started hiking, when Jerome Powell, around September, October, November. Yeah, I had significant positions also in C, but all of these companies, at the time, C was not profitable. So they got heavily punished by rising interest rates. And you see the market cap was obliterated for C. And in my opinion, it's just not grown quickly enough. As an investor, as a shareholder, we'll look at it in the charts. But if I compare C's performance to Grab's performance, this return on investment is not as good. So let's just show that in the charts here. A good chart, they say a picture paints 1,000 words, but I think a good chart paints thousands of words. You know, some like to wax lyrical and get into all. I think there's only, numbers are important, guys, but not every number is important. It's important not to be overwhelmed and know what to look at. There's key things for investors, expectations, revenue growth, EPS growth, income, net income growth, profitability, very, very important. So are the companies beating EPS? Are they improving profitability? So like I said, in a high interest rate environment, C, despite my belief that it's a super business, will dominate the market. And I highly recommend reading the Peter Thiel book, 0 to 1, because he talks about monopolies. And a lot of the companies that have a very strong position in the market, be it a monopoly or oligopoly, without rare exceptions, you're going to see very strong performance in their stock price too. So anyway, like I said, SE is Shopee, right? And this is over the past year, guys. And I think this is a very underappreciated company and investment. Look, 100%. You see a large divergence with Grab. Only recently, which is why I'm not as satisfied as an investor with Grab, because there's a bit of loyalty. if you're invested in a company, you know, getting that return on your investment, if the management team are doing their job, obviously they're keeping all the metrics going, but a good management team also respects the shareholders. You know, it's about the people, the customer, it's about the people within the company, but it's also about the shareholders. Those three constituents are the most important pieces of every company. So I think some companies forget that, and I think in the case here with Grab, if you see the performance over time, that if you were patient through C, there's a lot of volatility, peaks and troughs, but that's where I'm what I'm getting at with the loyalty. They're loyal and respectful of the shareholders. They're not forgetting their duty and obligation to try and do their best for the shareholders. I think Forrest Lee and the management team there, as soon as the interest rates, if I back up here, you're going to see horrible performance. It really tanked. But as soon as the interest rates and the economy started picking up, I think C's done a very good job of improving performance and giving performance to shareholders. I think Grab is very speculative. They, you know, as soon as Trump got announced, you got a lot of tech stocks just benefiting from the Trump bump. As you can see, even Grab is short-lived and it struggled. Whereas C keeps improving its operating margins, keeps growing. Let me just back out here, guys. So this is the past. Let me just go 5 years or so. Now, this is a mix of the Japanese. I know it's getting busy, but if we just zoom out and focus, this is pretty much the top performing companies. And some of the good companies I've mentioned in Japan, not necessarily top performing, but definitely in Singapore, C Limited, and I would say broader tech markets, and as well as some of the Thai companies. But if we just keep that all in mind, there's only a few tickers here, guys. It shouldn't be that. If you're honest with yourself, it's not that difficult to follow. But as you can see, C was a rocket ship. It really took off, and I do remember some of the hedge funds at the time calling out some of these stocks, saying they'll never reach it again. That's mainstream media talking. I won't mention the outlets or the analysts, but this is why I think you need to have alternative sources of truth, because the loudest in the room isn't always accurate. But you know, you've heard them, but is that good or bad? In this case, it was bad. Many people were calling out C Limited. Personally, I stayed the course. If you're an investor, things can be rough, guys. Look, this was November 21. It's still not recovered. It was down almost 80% from its peaks. But if you held your convictions, and if you just, I'm zooming into the financial statements here a bit, you can see that revenue is up. They've 3x revenue, and importantly, like I mentioned about profitability, the operating income went from a massive negative. So, and that was critical. Many people were fearful of the companies with negative operating income during the rate hikes. But as you can see, I think the double-edged sword was that companies quickly switched to positive operating income, as well as paying lower interest rates, or albeit the prospect of interest rates coming down. So C has also fended off competition from TikTok Shop. They were slightly lucky in the sense that the Indonesian government banned TikTok Shop. That was true about 6 months ago. Also, their Free Fire game Garena was banned in India. I'm not sure if it's been reinstated, but their top line revenue has just continually increased. And as you can see, the EPS numbers have steadily been increasing as well. And the way I look at it, the closest competitor that they have at the moment is Lazada, who, to be honest, are very strong. But C Limited, guys, is definitely a strong performer, and you can see the divergence there in the charts. I'm just gonna plug in some of the best performers in the US market and compare this. So let's take a look at Palantir and let's take a look at Nvidia. So I know these are getting obliterated today, guys, but I just want to emphasize this point. Okay, I give two bad examples because, like you can see there, Nvidia and Palantir have just yeah, they've outperformed every stock more or less. But if we look at C, guys, if you're looking for a happy medium, balancing risk, reward, not too bad. Higher than the triple Qs, higher than the SPX. Now, it is a growth stock. When we do enter recessions, this is going to fall. But for a diversified portfolio with growth value, dividend stocks, bonds, looking at geographies beyond just the US, which I'm not taking a position. The point here, guys, is to talk about diversity of your portfolio in terms of wealth building, and not so much taking a position just to say one is good, one is bad. I personally, you know, I love every country. I love America. I love everything, you know. And I myself have and had positions in a lot of, and the US is a large kind of contributor to several positions. But again, my point is just to show you kind of looking beyond to other markets to diversify the portfolio. No less, no more, guys. That's all. I'm not saying one is better than the other. But definitely C Limited, I think, is a very underestimated company. Even in today's headwinds or in today's kind of choppy waters, you can see it stands out. That's probably by virtue that Singapore has been probably a safe haven or a harbor in all of this tariff storm. But yeah, so moving on, guys. I'll get into that in the future because C is some very interesting company and stock that's not going away anytime soon. And there you see Grab in green. It's yeah, I'm not as bullish, I have to be honest, on Grab. Let's just pick up some of the financial statements. Let's look at the top line revenue and the OPEX, the operating income. So yeah, revenue is incredible. I mean, guys, they do serious volume. They're the number one operator of food delivery and kind of taxi services across Southeast Asia. But they're very slow to turn around their operating income to turn it into a positive. It's still negative. So that needs to improve. And it's still very high risk. So that's kind of not moving, if we're honest. Let's take a look at Food Panda just to see. Oh, okay, I think it's Delivery Hero. Yes, it's in Germany, guys. But I just want to take a look at a similar company to look at their financials. Okay, net income's not great there. I mean, this isn't, like I said, I sold out of this and I don't, it's very low margin, high revenue growth there, guys, but I really think that they need to improve the operating income to make sure this is a sustainable business. I'm going to take a look. Okay guys, so in the US market, I think the closest thing is DoorDash, which is not a public company. It is a public company. So let's take a quick look at their financials. So what's interesting here is that DoorDash are really improving their operating income. EPS is still negative. It was positive last year. It was positive. So Grab is almost close to getting positive EPS. But like I said, the operating income, there's a lot of metrics need to improve before I'm convinced about the viability, long-term viability of many of these. So C Limited, guys, is very strong, very strong. Grab, from an investment point of view, still have my concerns really. As a consumer, I love it. I really do. It's amazing. So I think this is a case where your investor hat versus your consumer hat have a little divergence. So yeah, let's see. So anyway, let's move to one of my favorite countries in the world, Thailand. Well, let's move. I mean, in terms of the video, let's move. Yeah, maybe. I lived there quite some time. Beautiful country. Everything about it's amazing. So let's just look at these companies I was talking about. One thing I would say, guys, is that I'm not here to give you kind of tips on some of the logistics, transactions, however you do your equities. But there is normally higher fees for trading these equities. When I looked at, I don't have the specifics, but in general, you're looking at hefty fees for trading, buying and selling these equities. So I would say this is long-term investments. But if we just take a look, I've not actually looked into Thailand in the last couple of weeks in terms of the markets. I've been looking heavily at what's going on with all of the back and forth with Trump's meetings with various heads of state, tariffs. In my opinion, I can see parallels with 2018. Choppy start, and then things started to pick up. So nothing really changing from that. But yeah, what's interesting here is that the AOT, I think AOT, guys, is a very well run. It's basically the airline or the airport operator in Thailand. And probably some of the most efficient. You've got Vinci from France. You've got different operators. The DAA from Ireland. Vinci, the French operator, is got operations everywhere, and their share price is quite strong. Slow and steady wins the race, as they say. But I wasn't aware of any recent news. If anybody is aware, I think this is following the overall markets in Thailand. If we look at the set here in red, it's literally in red, both the color of the line and the performance. Yeah, so funnily enough, I've put both SET, S-E-T, and the AOT in red, which is slightly confusing. But let's just I'll take NVIDIA and Palantir out. Let's get rid of the QQQ and the SPY, SPX. So yeah, perfect. We've got like 1, 2, 3, 6 symbols there. So a bit more easy. Yeah. So SET has just been declining. That's a major correction in Thailand, in the Thai market. That's quite significant actually. That's minus 20%. That's a major correction from its high. So I'm interested in looking at that now, guys, but I won't get into that in this video. So the SET is down minus 20%. For the larger indices is quite large. Over time, yeah. So I'm just looking at this over the period of, let's say, 5 years, guys. So yeah, so to that mid-90s, we had a massive drop in the Thai market. 0809, America catches a cough. Well, it was more than a cough. That was the pneumonia, the global financial crisis. But obviously, every other market tanked. So that explains that. And yeah, around COVID times, it's funny, the pandemic really set in January 2020, I think, when people started panicking more or less. But strangely, the market was actually since August, September already maybe front running some of that. And that explains this large drawdown. What's kind of alarming though is this is, yeah, like I said, guys, I've not been looking at that market in the past 2 to 3 months, the Thai market, and it's really, I need to take a look at some of the macro picture there, if rates have been decreasing. So yeah, the Thai market, stock market overall has just tanked. Let's take a look at trading economics, guys. Let's take a look at some of the charts. So if you are interested in learning more about macroeconomics, the Trading Economics is a very good website. And I'm just learning, guys, I mean, about really YouTube, how to do this best. So I find a lot of this very interesting. So I'm not exactly going with a script. It's all loosely related to Thailand, Singapore and Japan. But as you can see, there's a lot of digging to be done when it gets into reasons why, you know, looking at the macro level, the sector level, then the micro company level is generally a smart way to look. And it's not always very easy to do that just in a quick video, 20 minutes. I think a lot of people are paid millions maybe sitting in Goldman Sachs doing all this research, and I'm giving it to you for free. So anyway, yeah, the Thai SET has really tanked. So what's going on in Thailand, guys? So the GDP, has it contracted? Yes, okay, GDP is, the growth rate is, the GDP growth rate, it's okay. Like I said, guys, some of the leading indicators, GDP is a lagging indicator, so we already know pretty much what's happened. But housing starts and permits, building permits, are usually a good indicator. And I like to look at charts. Okay, so that's increasing. Let's take a look at the PMI. The PMI is really the industrial in the US it's known as the Purchasing Managers Index, I believe. And that gives you sentiment pretty much from basically industry and business level on their confidence levels. Okay, so let's look at the leading economic index. Alright, I can't get the PMI just there directly. I'm interested to see where inflation is going in Thailand and the consumer sentiment. Let's take a look at consumer sentiment. So nothing alarming there in the housing starts picking up. Consumer confidence decreasing. Okay, let's look at this. Okay, it has been on a massive high. I was going to look at Trueflation, but they only have it for the US and the UK. Okay, so interest rates were at an all-time, okay, let's take a look, all-time high. Interesting. So they've started to take down the interest rates. So let's look at the unemployment rate. It's dropping. Yeah, so I was living there for a long time, guys, and have friends in Thailand, and generally everybody's kind of happily employed, and it's dropping. Okay, very interesting, guys. Why is this market underperforming? It's kind of, and where is the okay, projected unemployment is looking to drastically increase. Let's look at the CPI decreasing. Could be recessionary, guys. If unemployment is projected to increase. Whoa, inflation is picking up, food inflation. Okay, slowly, but yeah, it's nothing huge. All right, guys. So nothing really in the really going over now, but okay, massive budget deficit, or no, it's it's actually decreasing. I'm looking just for some quick obvious signs. Inflation is nothing. Unemployment rate projected to increase massively, or to a larger extent. So I'm just very curious, guys. I might take this one offline, off the video. But yeah, as we see there, that needs to be, again, this is not financial advice, guys, but if you look at things over the course of history, if your time horizon is relatively large, I would say some of these gaps in the Thai market are, you're talking like 5 years there here, but they're less. It depends how low this can go, guys, but it's definitely at not an all-time low, but it's definitely not an all-time high. And if we just take a look at the better performing companies, some of the very strong performing companies, AOT, let's take a look at CPALL. They've aggressively expanded as well, guys. They're all over Asia, and there you go, it's reflected in terms of their market overperformance. You see the AOT, I would say, is a market perform relative to the SET, and the CPALL is a market overperform. When you talk about your alpha, you got a lot of alpha there coming from CPALL. So this is just in terms of general diversity of your portfolio, guys, and thinking about accumulating a stake in something that is a piece of business that's well run. and AOT is definitely one of those businesses. And I think that this fall, it's, like I said, back to overall market level, sector level, then company level. When I look at the company level, this company performs very strongly. You see the revenues have gone off the charts. Their operating income, well, obviously coming out of COVID, everything was minus, but they're really improving this, the EPS increasing. That's a very strong business, guys. So I'm going to stick in Vinci, the French operator, just to show you as well. Again, obviously Vinci is a European company, but very well, a very geographically diverse, a multinational. Sometimes these symbols are quite tricky because they always end with a PA for Paris exchange, which is not ideal. 1 second. Yeah, guys, I find some of the French stocks and corporations, they have the stocks named oddly, if I'm honest. DG, I don't get it. Normally the US stocks like Facebook, FB, Google, GOOG. So DG and Vinci, there's no obvious correlation. Anyway, so this is a good company, Vinci too. So DG, as you can see, it's somewhat of a, okay, there's massive divergence now. Some European stocks, this is nothing to do with the defense budgets, but obviously the defense stocks in Europe, Rheinmetall, everything has just gone through the roof. So I'm not sure if this is riding on the back of some of this optimism. But yeah, let's just take a look at you should see some similar financial progress. The EPS 139 for AOT, and Vinci's EPS is okay, much higher, and they have a nice dividend too. So very strong, okay, but it's decreasing. No, it's increasing. Yeah. So even during 2021, Vinci, guys, had a very positive EPS. I don't think they have a 2 or 3% dividend. Let's just take a quick look at the about. Yeah, like I was saying, guys, here you get to see what also people watch. So, for example, AXA, CS.PA. CS nothing got to do with EXA. Danone is BN. I think L'Oreal, OR, okay, it's similar. Anyway, guys, I'm not here to talk about ticker conventions, but c'est la vie, whatever. PG.PA, Vinci, a very good company. And actually, this is related to Asia because they have exposure. They operate airports around Asia too. So they are technically getting some exposure to Asian markets, albeit through a French domiciled holding company in Paris, or wherever the HQ is in France. Very good company. All right, back to AOT and CPALL. So yeah, some of this research, guys, you can keep watching, not watch. This is all a learning process for me too. So kind of bringing you along with me through the research. But CPALL, like I said, they have some very good brands, and this is the homepage, and these are all the brands that that they own and operate. So like I said, 7-Eleven, Lotus's Macro, particularly 7-Eleven. Bellini's kind of popular in Thailand, but if any of you hold the realty income, you know what I'm talking about. This is yeah, it's kind of it's a no-brainer for dividend investors. So not sure actually how much their dividend is. Let's take a quick look. And just bear in mind that this is not a transactional type stock, guys. You want to get in and hold. So 2.66 grower, or what's known as a dividend aristocrat. So very good website called Dividend. Alright guys, so not bad. I wouldn't exactly call them a dividend aristocrat. They've not consecutively grown, if this information here is accurate. They've not consistently grown the dividend. If you take a look at O, for example, or realty income, look at that. Amazing. Non-stop growth even during recessions, guys. So yeah, that's anyway, guys. Again, there's a lot of content being made about US stocks. I'm not here to do that, but just giving you an idea to open your eyes that yes, different countries, Asia, different countries, but a lot of the business models operate the same. People get hungry, you know, Maslow's hierarchy of needs. People need to sleep somewhere, they need to eat. They need everything that they're marketed to with consumer products. And these companies don't just exist in the US, obviously, and the multinationals in the US don't always have significant exposure. So even though P&G, Procter & Gamble, Marriott, etc. have properties all over the world, some of the corporations have their own, you know, they have you know, they're based, such as CPALL, and they franchise or they lease or they have some ownership of these brands through licensing agreements, etc. And it's actually better to be an owner of that business rather than you know, the Delaware domiciled, US domiciled, wherever it is, stocks, because you also get currency benefits in some of these, well, maybe not in the Thai baht, some other countries, when you're looking to diversify risk, you also get paid in diversified currencies. So if it's Singapore, you're looking at, if you're in DBS, etc., some of the banks, you get paid in Singaporean dollars. So it's always nice to be diversified, guys, which is where I am coming from in this content. And trying to show you, like, it's not about horse racing, guys. You know, these people, some people manage businesses like this. They think about betting on horses, which is sad but true. But this is actually how, like, a board level, investor level, C-suite level, how proper CEOs and management teams, leadership teams try to think about companies and performance. Like I said, about the customer, about the internal employees and the shareholders. I think it was a famous quote from Jack Ma. Yeah, he mentioned that too. The Alibaba, one of the most successful e-commerce companies. But I believe that's the winning formula, guys. All of those constituents, and you've got great companies, and they're outside America too. So you've got your Metas, Amazons, etc. But if you look at some of these companies, guys, they're very well run. All right, so I think we're done, guys, for this, more or less, with CPALL, AOT, Thailand. I got terrible pronunciation. My Japanese is terrible, guys. I'd love to learn the language. So what I was trying to say is those 5 trading houses have a very popular name in Japan. And as we speak, I might just try to dig it up. Shogo Shōsha. So Sogo Shōsha. Yes, you see, I'm also taking risks with my my reputation and image, guys. I'm somebody who takes risks in stocks, and I'm not afraid to look to embarrass myself. Anyway, so Sogo Shōsha are very interesting, and what I didn't touch on too much actually was Tokyo Electron. So Tokyo Electron is very well run semiconductor business as well. And so if you look at Broadcom, Nvidia, ASML, the Dutch company, Micron. What's interesting as well, guys, all the symbols. It's like the Hong Kong Exchange. All the Japanese stock tickers have basically got numbers, which yeah, if I had to rank these in terms of difficulty, remember the US number are the least difficult. Super easy to remember any ticker in the US. France, semi-difficult, but yeah, the Japanese market, remembering the numbers, no chance. So anyway, 8035 is Tokyo Electron. But if you just take a look at that in terms of performance, it's very strong. So I'll get rid of the Thai examples. And I'll just add in, like I was talking about, some of the other semiconductor type stocks, the ASML. I'll stick in, no, I'm not going to include Nvidia. So you can see a strong correlation there. ASML, one of the best performers. But if you look at Tokyo Electron, also very good. Basically over the past 20 years, we're talking, well, if you look up to 24, that was 1,300% return. ASML is ridiculous, but out of curiosity, I'm gonna include Nvidia, guys. And I think, as you see here, guys, it's all about time in the market, not timing the market. So if you're all about timing, you're a trader, you're not an investor. And I can appreciate not everybody is the luxury of time. It is a luxury. I think nobody, well, only a few could have predicted the dominance that Nvidia would have in terms of its chips for the AI revolution. Yeah, so I'm going to take that out. It's unfair to compare this. Yeah, so let's just put the Nikkei in there, just so you can see Tokyo Electron versus the general Japanese market. So massively overperformed. Yeah, let's take ASML. Sorry guys, I'll get rid of these other chip stocks, and we'll end off with Japan a bit. I dug into it a little bit, but not enough. So because I didn't include Tokyo Electron. Yeah, so Singapore is covered. I'm clearly biased towards C Limited, guys. Now again, I'm not a financial advisor, just sharing you my thoughts. You also have to think about where we are in what's known as the business cycle. I'd really recommend reading Ray Dalio, also from Oak Bridge. Yeah, the famous investor Howard Marks. Howard Marks. I was getting confused between Howard Hughes and Howard Marks. But yeah, so pretty much Ray Dalio and the business cycle. Howard Marks from Oak Tree, not Oak Ridge Capital. He's got two very good books. The Most Important Thing and then Mastering the Market Cycle. So when you look at some of these and you think, wow, yeah, yes, you can think good, bad, etc. But just have a think also about the cycles too. Personally, we've been through and are going through some difficult times. And I think that there will be even larger corrections, and we're coming towards the end of a business cycle rather than the start, so just bear that in mind. So yeah, let's just take a look at some of the other top mega cap stocks in Japan. So Mitsubishi and Toyota, and maybe some of the Shōsha companies, Marubeni maybe. Oh, I love it, all these numbers. 8002 is Marubeni. I'm gonna stick in fast retailing, guys, Uniqlo. I'm quite curious. 9983, okay. Whoa, I think we see some growth there. And of course Toyota, how could I not include Toyota, guys? I think it's number one in Japan. Let's take a look. Where is Japan? Toyota. Okay, yeah, so Toyota is the number one market cap, 243 billion. Get grab, go away, grab. All right, so Toyota. It would make sense just to call it TM, but no, it's 7203. Okay, fine. All right, actually quite interesting when we're digging through here, guys. Fast. I'm actually not surprised. Uniqlo, it's a brilliant. Again, you have to look at through different lenses, right? Through the macro picture, the micro picture, your consumer picture. Just because you love products, I think everybody loves Nike shoes, Adidas shoes. It doesn't mean it's going to be a great stock. All right, so 9983. Let's just take a look at some of the Uniqlo statements. Okay, good revenue increases, operating income improving, EPS improving significantly. Yep. Yeah, that's where are we? Too many tabs open here, guys. So 9983 is fast Uniqlo. And yeah, so yeah, that's one of the, so Tokyo Electron is top performer. Has been the best performer, one of the best, and definitely alpha stocks in terms of outperformance of the market. The Nikkei, sorry guys, everything's in green, but yeah, the Nikkei Yeah, I'm trying to just get the market. Yeah, here. No. Okay, it's here. Too many greens, guys. What the heck? Where is it? Yeah, okay. There's too much green. So there you can see the bottom green here. Yeah, so the way I performed the market, and Uniqlo is obviously is one to, I would say it's more than one to watch, guys. That's something to actively participate in. Again, I'm not calling out I'm not calling out any times, etc. Okay, so these numbers, guys, are absolutely difficult to make things to see. Just if you have a name, it's so easy to see, but this is Mitsubishi is 7011, and over the past year that's clearly outperformed everything. So that's what I would call stellar performance. I'm interested in the other Shōsha performances. Okay, they've not done too well. I mean, over the last six months, everything is diverted. Pretty much since December. Mitsubishi is on a tear though, relatively speaking. So guys, you got some outperformance there. If anything from the video, you can see like, if we summarize, you've got some very clear, in these choppy waters and choppy times, you get some stocks and sectors are clearly in alpha territory. In Japan, that's Mitsubishi. In Singapore, that's been Sea Limited. Unfortunately, all boats, the tide has not, when the tide goes out, or they say the tide lifts all boats. Unfortunately in Thailand it's the same. When the tide is gone out, and I would say unfairly, I have to dig into the macro picture there. I haven't looked into it recently, guys. There must be a reason for such underperformance in the market. But back to my point about 0 to 1 and market monopolies. AOT have a dominant position in Thailand in terms of operating the airports: Bangkok, Phuket, Koh Samui, Chiang Mai, Chiang Rai. High traffic, high growth markets, and very strong balance sheet, cash flow. So is it a buying opportunity? I'm not a financial advisor, but I can tell you it's a very strong company going through some tough times as a CPO. So there's 3 markets in Asia, guys, just to give you an idea. I hope that's given you some insight. Again, I'm not sure how that will work out for you in terms of fees, etc. But anybody who's of the long-term mindset, they won't care about that. If we look back and you're owning Mitsui or Tokyo Electron, or 8002 Marubeni, which I think Warren Buffett bought too, since, let's say, the bottom of the financial crisis or the bottom of the COVID crisis. I don't think you're going to be complaining with those returns. So I think, as Rudyard Kipling, I would read the poem If, because it's also, I would say, a very great to think about that, and the psychology that you need also in when you get involved. It's not for the faint-hearted, guys. This is not advice, but just in general, if you have a long-term mindset, you really believe in companies, the people, the vision, you know, the results will come. If you're a trader, can't help you. This is not really that focus. Yeah, I think it's kind of gambling, to be honest. And there are various chart patterns that people can try to rationalize, but it's yeah, it's not yeah, it's not for everybody. It's not very predictable. But here you can quite, you know, you can use macroeconomics to spot kind of buying opportunities. And yeah, I'd also recommend The Intelligent Investor by Benjamin Graham, which is inspired Warren Buffett. And I think a lot of those fundamentals, even though technology has changed so much, the fundamentals don't change here, guys. And also the markets are different. Thailand is not the US, Singapore is not the US, Japan is not the US, but a lot of the psychology and fundamentals, if you think of Maslow's hierarchy of needs, you think of sectors, this doesn't change. And if you're willing to look outside the box a bit, you can find opportunities. So there you go, guys. That was a quick, my first kind of entree into this. I'll see. I do get some feedback from videos. I find some of it objective, so thank you to the people who give me objective feedback. I have noticed some people just constantly trolling, so not being objective, so I don't really appreciate that. So you can keep that to yourself. But if you have yeah, I'm always open to constructive, helpful feedback, and we all kind of grow and improve. My first video, guys, very rough around the edges. I think some of the concepts here and logic is actually not that rough. I think it's very solid. I think these are very solid companies. In terms of setups to get in, get out, that's not what this is about. It's just to open your mind a bit in terms of the opportunities that are out there, and the really high quality companies that exist in Asia. I get into this a bit more, other markets, other companies. This is more, I would call it an eye-opener into investing in Asia. And there's a lot more markets that have opportunities. I'm not saying this is the top 3 or something. This is just 3 markets I've kind of picked up and just ran with for today. I might do something Hong Kong, China, Korea, different markets, Vietnam. There's so much going on. There's so much dynamism across different markets, also in India. And I'm really trying to focus on the kind of road less traveled, because when I look at things today, I see constantly everybody's talking about Nvidia, everybody's talking about Tesla, everybody's talking about Palantir, everybody's talking about Netflix, Apple. Great, guys. We all know they're great companies. Nobody's disputing that. Also Europe, maybe touching some of that, because there are some great companies that I think go under the radar. A lot of the French, the CAC 40, not all the CAC 40, but you have amazing companies there. I've mentioned one of them, Vinci, there's L'Oreal, and L'Oreal LVMH, also in Germany, amazing companies, the largest economy in Europe. I mentioned some of the defense stocks. They've got great aero, manufacturers as well as the consumer product goods, Beiersdorf, etc. Competes with L'Oreal, Nivea, for example. And if we look at Italy, I think an amazing company that's gone really under the radar is Ferrari. stock ticker RACE. And there's lots of kind of pockets to look at to kind of diversify out your kind of interests, so that when you see in times like this, when the market is acting, the US market, public equity market is acting very irrationally, yeah, you need to be diversified, guys. Even as we speak here, let's just take a quick look. I think it's just gone, yeah, down and down and down. Here we go, minus 1% today. VIX probably 30. I bet it's 28, 29. Okay, I've got everything comparing against each other. Yeah, so the VIX, okay, it's a 24. That's lower than I expected, if I'm honest. All right, anyway, guys, getting tired here, very late in Asia. But like you can see, guys, look at that volatility since mid-Feb. I mean, it's consistent, guys, just gone up. It's not nice every day you see, maybe it's your savings or your pension, boom, 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 and just gets obliterated for no reason. Just so reasons to think, guys, you know, reasons to diversify. Like I said, okay, I can't actually, I think I was traveling then, I don't remember this one, but I very much remember the carry trade, the VIX. This is bigger than 87, the stock market crash of 87. That was, no, it wasn't. I think at one stage it did. It went, no. Yep, I'm looking at the wrong VIX. I need to get the Chicago as the CBOE. Okay, it doesn't have 1987, guys. That kind of sucks. Anyway, so yeah, like I was saying, the yen carry trade was just off the charts, but it was very incisive. Just went up, down, panic over. What's more concerning this time is that it's creeping up and up and up, and it's leaving like a very uneasy feeling. And if you look, yeah, it's kind of reminiscent of just this period coming up to the, the period coming up to the rate hikes in 21, where if you're holding a lot of those stocks, you got obliterated, guys. So just be safe out there. You know, nothing's guaranteed, and we're going into some very interesting, very challenging conditions, trading conditions at the moment. The overall economic picture, people talk about the Atlanta GDP. The overall GDP seems to be quite stable if I'm objective and looking at inflation. True inflation is dropping, which is why I think these numbers is very irrational, because I think we're 12 to 24 months away from anything recessionary. So it just smells a bit, but anyway, it could be, as they say, a buying opportunity, but just be safe out there, guys. And yeah, I tried to bring you some more content from Asia, showing you different perspectives. So just hope you enjoyed some of this. Appreciate any good feedback. Like I said, don't appreciate the bad kind of subjective stuff, like doesn't help anybody. I think maybe some people need therapy or therapist. I'm not here to take your toxicity. I'm just trying to kind of share some insights from kind of some of the Asian stocks here. That's it. And yeah, guys, so I hope you enjoyed that. If you didn't, you don't have to watch or comment, or you can go to other places. And yeah, I'll try to keep improving, guys. A bit all over the place today. It was more of a journey of going through equity research a little bit in 3 markets, but it's, you know, there's no recipe, there's no, it's not an exact science, it's an art and a science as well. Macro, micro, sector, everything. So yeah, I hope that, you know, I just trying to show you more kind of options, and also back to the point about kind of horses, guys. It's not about gambling, you know. You can look at certain fundamentals and take calculated risks. Yeah, and the opportunity is there, you know, if you have patience and time. If you don't have time, more than 5 years, you probably shouldn't be investing, guys. You shouldn't touch anything and call yourself an investor. You're trading, you are a gambler. I'm sorry to say. I think that there are other definitions. I think they have it slightly shorter. But personally, I think it's a very much, even a lifetime kind of perspective, you know. But so my emphasis is long-term investment, you know, almost buy and hold. But yeah, I'll try to just share some more insights from the perspective of Asia as well, and other markets, European markets, just to kind of show you how much opportunity there actually is out there. Okay guys, thanks for watching. See you in the next one.